As I told you before in the introductory video, for most of the screen sharings we're going to be using the tradingview.com website, which is a website dedicated to technical analysis. A lot of the oscillators and indicators we're going to be talking about are fairly easy to set up in TradingView. You don't really have to calculate anything yourself. You will just click a button and read the results. I will teach you how to read these results. But before we can move to that, you have to understand the chart itself. You have to understand what you are looking at when looking at a chart. We have several kinds. Let's look at one right now. So, this is how the candlestick chart looks like. You can see there are several candles of two colors, red and green. These candles have a thick body and a thin line above and under. Altogether, these candles portray a certain movement of the price. Naturally, if the candles are moving downward, it will be a bearish trend, and if they are generally moving upward, it will be a bullish trend. When looking at a single candle, every single candle is going to portray a time frame. This time frame you can set up right here. If your chart is going to be set to an hourly chart, every single candle is going to portray 1 hour, and therefore is going to show you the price movement within this hour. If you are going to set up a weekly chart, every single candle is going to portray 1 week. Right now we are looking at an hourly chart, so every single candle shows us 1 hour of trading. But that's not the only thing I can read here. Every single candle shows me actually 4 types of important information. It shows me at what price did this particular candle open and close, and it shows me the highest price and the lowest price at which this particular asset was trading within this hour. Let's first focus on the opening and closing price. If the candle is green, the opening price was lower than the closing price, which means that the price increased within this hour. So logically, if there was an increase in the value, the candle is green. So this is our opening price for this particular candle, and this is our closing price. If we now look at a red candle, the opening price has to be higher than the closing price, because the red candle indicates that the value decreased. Therefore, the body is red, and the closing price of this hour is below the opening one. The other two things are highs and lows. Those are represented by the thin lines sticking from above and from below the candles. These lines are called shadows or wicks. The top one is representing the highest price at which the asset was trading within this hour. Therefore, logically, the down one is representing the lowest price point at which this asset was trading within this hour. All of these 4 pieces of information are actually displayed above in TradingView. The only thing you have to do is to hover above the candle with your mouse, and you can clearly see these 4 numbers above right here. There you have it. Every single candle will show you the highest point and the lowest point at which an asset was trading, and it will show you the opening and closing price with a thick colored body. Since you now know what these candlesticks represent, you can understand the form of the chart better. If there are more green candles behind each other, the overall movement has to be upward, and if it's red, it has to be downward. As the candlesticks go one after the other, they can shape certain patterns within the chart. Studying and recognizing these patterns can help you the most in distinguishing in what direction the market will go. That is something we will discuss in this course as well.